Ever wonder why a crypto-related stock pumps, but the related altcoin in your own portfolio doesn't move? It's not an accident, it's a strategy. Wall Street is moving into crypto, but they're not buying our backs. Welcome to part 2 of my special 3-part Crypto Week series. In part 1, we exposed the global war for the digital dollar. If you missed it, the link's in the description. Today, we expose the second great crypto battlefront, Wall Street's backdoor invasion of crypto, and the 3 waves they're using to capture the upside before you do. Hi, I'm Anna, and welcome to Sovereign Stash. If you're ready to see Wall Street's real playbook, hit the like and subscribe button below so you don't miss the epic conclusion to this series coming next after today's video. And for those just starting out, my free 5-day crypto email course is the perfect place to begin. The link's in the description. Now, let's pull back the curtain. For years, large institutional funds have been restricted by their investment mandates from buying crypto directly. Now they're invading the space through 3 distinct waves, causing a divergence where crypto-related stocks are outperforming many of the underlying cryptocurrencies and crypto assets themselves, leaving altcoin holders pissed. Is this something you felt? Let me know in the comments. Thank God my biggest bag is Bitcoin, is all I can say. Whether crypto natives like it or not, TradFi is coming for crypto because they have to if they want to survive. The first TradFi wave is what I'll call the Proxy War. Equities-only funds are using stocks like MicroStrategy and the value from Circle's recent blockbuster IPO as a backdoor to get Bitcoin and stablecoin issuer exposure onto their balance sheets. And more recently, other crypto like Ethereum and Solana also have companies putting them on their corporate balance sheet and watching their stock price pump. The second wave is the Tokenization Wave. We're seeing traditional assets being tokenized on crypto rails. For example, Robinhood has recently launched on Arbitrum 1 and also announced it will build its own custom Layer 3 blockchain using Arbitrum's technology. Arbitrum is a Layer 2 chain on Ethereum, for those of you who don't know. So they're bringing tokenized stocks firstly to the EU users to begin with. Robinhood is poised to become a financial super app for retail market participants and is progressing rapidly to integrate TradFi with crypto. And you've probably seen Robinhood's stock price. Arbitrum didn't move so much. At the same time, platforms on Solana are also launching tokenized stocks, bringing traditional equity exposure directly into its high-speed DeFi ecosystem. And it's not just public companies. We're even seeing pre-IPO giants like OpenAI being tokenized by Robinhood in an attempt to give investors exposure to the private equity market. Just note that OpenAI has allegedly distanced itself from those tokens, but expect to see much more of this kind of activity. Read the T's and C's. Giants like JP Morgan have successfully tested tokenizing real-world treasury bills on Ondo's testnet and using Chainlink's Chain Interoperability Protocol, CCIP. This is a protocol used to ensure secure communication and asset transfer between different systems, basically between TradFi and crypto. Essentially, the tokenization of literally everything has just ratcheted up a level this year because the new administration's green light on crypto means the big players aren't afraid of being sued anymore. So they're making aggressive moves forward on their crypto plans. But all of this is leading to the third and most important wave, a wave driven by a concept that has now gone mainstream: Fiat Doubt. Fiat are government currencies. When Elon Musk, one of the most watched CEOs in the world, publicly states that fiat is hopeless, you know it's a signal. And that signal is pushing Wall Street toward the only non-government issued, geopolitically neutral, self-sovereign digital alternative with a proven track record. This is what's driving the reclassification of Bitcoin. We're watching Bitcoin shift in real time from being treated as a high-risk tech asset to a gold-like reserve holding, a type of crypto sovereign bond, if you like, on the world's balance sheet. For the true believers, this is the first step towards the hyper-Bitcoinization of the world. Wall Street is finally starting to treat Bitcoin like digital gold or a core treasury holding. In other words, they're starting to consider Bitcoin a foundational asset, similar to bonds, to own for long-term stability in a world of unstable government currencies, especially in a world of endless government money printing, making their fiat currencies worth less and less every single year. Wall Street isn't just day trading it, they are accumulating Bitcoin as well now, any way they can. As Rick Edelman, founder of his own major financial advisory firm that has almost 300 billion assets under management, recently stated on CNBC, a 10 to 40% crypto allocation now makes sense for mainstream portfolios. That will blow some people away. So now you see the three waves of the invasion: the proxy war with stocks, the tokenization wave bringing real-world assets on-chain, and the most important wave, the reclassification of Bitcoin as digital gold or a core treasury holding. Wall Street has a plan, and it's already in motion. So we have Wall Street fighting to control the new digital money issuers and fighting to own the new digital gold. But knowing their plan is only half the story. The real question is, how do we build our plan to navigate this new reality? In the final part of this series, we break down the third great battle, the war for the dominant crypto platform. And then I'm opening up my personal investment playbook for the rest of 2025. This final video is a key video of the series, so I'll see you there. Click the link on the screen or in the description below. If this breakdown was valuable, don't forget to hit the like button, subscribe, and share it with another friend who you think needs to hear it. Thanks for watching. See you soon.